everyone. And the recording is going. So we are recording this class. If you miss any parts or have to leave, or if you'd like to pass this on, it'll be available at another time after the day passes. So I wanted to thank you all for attending. I appreciate you taking a chance with us on Zoom because this is all new to us this fall. And New Knowledge Adventures is all about learning something new. So throughout this fall session, we're learning how to do these videos. And hopefully our technology works and you're able to see us. And we would like you to use the chat window if you have any questions, or if you would like to, there's something you would like myself to address to the presenters, or if you would like to ask that question yourself, please just tell me in the chat window and I will make sure you get unmuted and you can ask that question as we go along. The presenters are going to present and we're going to hold those questions that you're asking until they're finished presenting. So maybe 30, 40 minutes into the presentation, we can open up for the questions. So I appreciate your patience on that. I want to give you just a brief history about NKA because at this point it's about 15 years old and the dedicated volunteers put this together in Pocatello in a partnership with Idaho State University. The volunteers looked at many different models and decided to create this particular model we're using, New Knowledge Adventures. It's very affordable because there are no costs, of course. It's all volunteer governance. The presenters, instructors do this for us and they aren't paid. They do this out of the goodness of their heart to educate all of us. And we try to get a very active engagement to the community, and we try to give you some diverse, different subjects, some things that you can participate in, things that you can just have knowledge, and maybe you'll pass that on, hopefully, to others, what you learned today, especially since it all affects us in Ada County. So of course, this fall, these classes were going to be live, and now the Treasure Valley it's the first time, and we're the only group that's offering these online classes. So I just want to tell you, this is all driven by volunteers. If you would like to volunteer or be part of our group, we'd love to have you sign up in any manner, whatever piece of the puzzle you can do for us. So we are thankful you're here, and we are definitely thankful to our instructors today who are participating with us. So the two people we have today are Beth Mann and Robert McQuaid, and they are part of Ada County, the treasurer, and the assessor. So I just want to I'm going to give you a brief bio on them. Elizabeth, which I call her Beth, is a Boise native and a fourth-generation Idahoan. She holds degrees in business and law from the University of Idaho. Beth has over 20 years of experience in accounting, law, and public service. Ada County Assessor Robert McQuaid is serving his 7th consecutive term since being elected in 1994. He holds a BA in economics from George Mason University, as well as an MBA from Boise State University. So that's my introduction. I'll let them say whatever they'd like to say about themselves and their particular piece to the puzzle as working with our property taxes in Ada County.
Fantastic.
So there you go.
Great. Thank you, Marie, for that introduction. And thank you to AARP for hosting us today. It's been so great to learn about New Knowledge Adventures and the variety of offerings for our community. And we're really grateful to the opportunity to be here today and present to you virtually. So, and thank you to the participants for joining us today. As Marie mentioned, I'm the Ada County Treasurer. And so as treasurer, I am one of 9 elected officials for Ada County. There are 3 commissioners, a sheriff, a prosecutor, a clerk, a coroner, of course, Assessor McQuaid, who's with us, and then myself as treasurer. And one of my duties as treasurer is to serve as the tax collector. And that's our topic today, understanding property taxes. And it's a topic that has received a lot of attention lately. Just last night, I was listening to Idaho Matters. And there's a series right now on growing pains. And one of the captions was as why our property taxes are so complex. And it's so true. Property taxes are hard. It's hard to grasp these concepts. It's hard to understand why taxes are increasing. It's hard to understand what we can do about it. And so we are happy to be here today to talk about the process, give some background on how it works. As Marie mentioned, this is a topic that touches all of us. You may own a home, in which case you're paying taxes. You may rent a home, in which case a portion of your rent goes to taxes. You might visit public libraries or stroll in public parks, and these receive funding through property taxes. So we're here to discuss the process, and our objective is to give you tools and some additional foundational knowledge to understand what this process looks like. So we'll advance to the next slide. And I will give an overview of the topics that we'll be discussing during this presentation. We're going to start out with Assessor McQuaid. He'll give an overview of the role of property tax and then dive into the assessment process along with the appeal process. Then we'll come back to me as treasurer, and I'll talk about the calculations that go behind property taxes and help you understand how to interpret your tax bill when you receive it later this year. Then we'll go back to Assessor McQuaid, who will talk about some property tax relief options that are available. And then he'll also discuss the Property Tax Interim Committee that has begun to meet. And we'll conclude with questions and answers. So again, welcome to all the participants. Thank you for having us here today. And I'll hand it off to Assessor McQuaid.
Beth, thank you so much. I would like to just say good afternoon to everybody, and it's really a pleasure to be with you this afternoon. I wish we could be in person, but virtual is the next best thing. I would really like to thank ARP and Marie for inviting us to share our thoughts with you this afternoon. There seems to be a lot of confusion about property taxes, and the more we can get the word out there, I think the better off we're all going to be. Let me start off just by telling you how I got to be the assessor. I think most of you have probably seen the television series back in the 60s and the 70s called Gilligan's Island, and it's about where some people, they just went on a 3-hour tour out on a boat, and they got into a storm and marooned on this island, and the series lasted for many years. Well, that's in a way how I got to be the assessor. It was in August of 1979. I happened to be visiting here in Boise and just finished my studies at George Mason University, and I knew one of the commissioners. And he said the assessor was looking for some help if you'd be interested. And so I started in August of 1979 as a property researcher. It was a 6-week job. And fortunately for me, this outdid the few years that they spent on Gilligan's Island. It's been 41 years now that I've been working here in the assessor's office. I love my job and I love the challenges as the assessor, and I am learning something new every single day. A day does not go by where I have this epiphany as I did not know that. But it's what I really especially like about my job is solving problems for the public. It's so challenging. It's like putting a puzzle together. And, you know, whether it's, we had long lines out of motor vehicles. When I took office, we were looking at about 45-minute wait times. We've got that down to about an average of 5 minutes. It's a little bit more than that right now because of the coronavirus. Or transparency was really a problem, and that's something that we'd worked on. An aspect of that transparency is you've noticed probably several years ago that on your assessment notice that it gave the history of the 5-year history of the assessment as well as what the property taxes were for that period. And so these are some of the things I've been working for. Of course, the assessor is only one of many things, functions. We have motor vehicles, we have a mapping department, but what everyone really seems to identify the assessor's office with is appraisal. And that's what I'm here to talk to you about today. Before we get started, I want to just make 3 points. First, property tax is a general tax. It's not a fee. This really, I've heard quite a bit of discussion lately where people are saying, well, you shouldn't have to pay, why should I have to pay for schools? Or why should I have to pay for a library? That's a general tax. It's not a fee. A fee would be a driver's license, a motor vehicles license. It's something you pay dollars for a very particular purpose. Property tax presupposes that property wealth is a measure of ability to pay. Property taxes go back to well over 2,000 years. And at that time, it was based upon property, and property was animals. There's just this supposition that the more property you have, the more value your property is, the greater ability that you have to pay property taxes. And I don't know, it's come into question at this point in time because things are a lot different. Some people can, especially here, we'll say in Ada County where home values have really been increasing, but it's not tied to cash flow. You can have a house that you lived in for many years, you spent $25,000 for it, and it's worth $600,000 today. Certainly your cash flow, especially if you're a senior, has not increased that much. So that's a bit problematic. The purpose of the assessment is to allocate the tax burden. I'm always accused of increasing the value to raise more money for the different taxing authorities. And hopefully when you're finished, you realize that why that's not true. But we raise we set the values to allocate the property tax, and that's based upon the value of the property. There's absolutely no correlation at all between the value we set on property and the property taxes that are being generated for a taxing district. So, could we go to the next slide, please? A few definitions we need to have before we get started here, so we have a clear understanding. That is a reappraisal versus a physical inspection. A lot of people think that we only have to reappraise once every 5 years. And I know this is parsing words, but I believe that we reappraise every year because we have to be at market value, 100% of market value as of January 1st each year. This to me is confused with the physical inspection. The physical inspection, by statute, we have to physically look at 20% of the properties each year. So there's a reappraisal to set the value, and there's a physical inspection to go out and check to see if there is any substantial differences in the property, significant differences from what our records show. So for example, if there's additional depreciation needs to be added. So that's reappraisal versus a physical inspection. Market value for assessment purposes. This seems to be quite confusing. I hear from people all the time, well, it's market value, you know, it's for assessment purposes. It's not what I would really sell it for. Well, we believe that as of January 1st, that our assessment value, our market value would be what a property would be expected to sell for, that they are comparable. And I really believe that. But they do change as we go through the year, and that's something that we'll discuss in a few minutes. So how well do we do at getting the market value at 100% of value at the first of the year? The State Tax Commission is an oversight body, and they monitor how well we're doing. They do what is called a ratio study, and they take of all of the properties. Last year we had about 13,000 sales in Ada County. They will take those sales and they will compare our assessed value to those sales. And we need to be between 90 and 110% in general of that. And if you can look at this slide here where it says residential improved 2019, we're at 98% of the value. So we're very close to 100%. In 2018, we're at 96%. And you can see commercial and commercial land and manufactured housing. Going back to looking at the residential improved at 2019, we're at 98.3%. I really don't, even though we can go up to 110% and stay in compliance with the regulations, I really don't want to cross that 100% mark, because that would mean some people are without a doubt being overassessed. I had mentioned that our value is as of January 1st, and that I want to emphasize the difference between mass appraisal and a fee appraisal. Here in the assessor's office, we do a mass appraisal. Mass appraisal, we look at all of the properties, and rather than taking one house and figuring out what that's going to be, we'll say this quality of a house, this age of house in this neighborhood would probably be, these houses would probably be X. We do fee appraisals when we go to appeals, and that's where we sit down and we look at an individual property. We will evaluate each of the characteristics and be more detailed, but we do mass appraisal. And so there's going to be variation. Some people will be right at 100%. Somebody might be at 95%, someone at 92%, someone else might be at 105. That's just one of the problems with mass appraisal. And when we do overassess a property, we would really hope that the taxpayer would come forward with that. Next slide, please. Just going to see how we're doing on time here. So let's talk about the assessment process here. Is how the assessment process goes. We have residential versus commercial, and they're done two completely different ways. Residential property is done either through a cost approach, we do that on new construction, or a market approach looking at sales. Commercial is done on the income approach. That's how commercial property owners make their buying decisions, is through, we look at the income value that's being generated by that property, and then we impute a value based upon that. Let's talk about residential. It's probably most appeal to most of us here. We had about 165,000 single-family residential parcels. New construction last year, we had 5,500 parcels. And on new construction, we will go out and we will measure those. We will take a look at them to see the quality of them. And then we have what is called the trended cost. We have cost tables in our computer models that will value the house based on what the lumber would cost, what all of the different components would go into building a home. That's for new construction. Again, we have 5,500 parcels last year. Most of us have existing residential, and that's why I want to spend a little more time on. We had about 12 or 13,000 sales last year, single-family residential sales. So it's how we calculate the estimate of value for residential and existing is we take all of the sales. This is going to be for 2021. We're going to take all of the sales that occurred in 2020, and there'll be January, February, March, and we're going to time adjust those to January of 21. And that would be the value that we would expect the house to sell for January 1st of this coming January. Well, we will look at the percent change from what we had assessed it at as of January 2020 and what that estimated value is of these sales for 2021. And we'll look at that percent change. We will look at that by neighborhood. And then we would say, okay, this neighborhood went up 13%. And we'll then take those parcels, similar parcels in that neighborhood, and we'll move those up that percentage. Last year in Ada County, we had about 10% overall county. Wide was about 10%, but that changes from neighborhood to neighborhood. Once we've done that, takes us up until about mid-May or the end of May, and that's when we send out our assessment notices. Those go out on, we typically send those out on Memorial Day weekend. And the you've got about 3 or 4 weeks to contact the assessor's office. Then the 4th Monday of June, the 2nd Monday of July, we have the Board of Equalization. I'll talk about that in a minute. And then there are other avenues of appeal. But we really encourage people, when you get your assessment notice, call the appraiser. 90% of the disputes in value are typically resolved just with a call to your appraiser. And then, of course, we have the appeals to the Board of Equalization or Board of Tax Appeals. All right, let's see here. So what does the next slide look like here? Just one. So let's talk about the appeal process. Great, that's what I was looking for right there. Thank you. We really encourage you to call the appraiser for reasons I've just said. It's very informal. It's usually just a telephone call. Perhaps you might have to send a little additional information in. It's usually very amicable. I'm not saying that a telephone call will mean we will change the value, but if it doesn't change the value, most often we find that the person who owns the property, that they're satisfied that, well, okay, I didn't understand, but they've done their job and I agree with what they've done. Well, if you can't reach a conclusion of value with the appraiser, you want to go to the Board of Equalization. That is the county commissioners are sitting as a quasi-judicial board where they take testimony from the taxpayers and the assessor's office, and then they will decide whether the assessor was overvaluing the property or not. If you don't get relief at the Board of Equalization, and by the way, the Board of Equalization is from the 2nd Monday of June through the 4th Monday of July, and it's very important that you get that appeal in before the end of the day of the 2nd Monday of June, because that's the last day you can file an appeal. If you aren't happy with the Board of Equalization, you can go to the Board of Tax Appeals or to the District Court. Either one you can do, but you cannot proceed to the Board of Tax Appeals or District Court if you have not at least filed with the Board of Equalization. The Board of Tax Appeals is a little more formal environment, and again, they have very strict deadlines. Those appeals usually have to be filed in August, and hearings start. In fact, our first hearing for this year, Board of Tax Appeals, is tomorrow morning at 9 o'clock. Just to help you out with what are we looking for, what is the Board of Equalization or what are the Board of Tax Appeals or District Court looking when they're trying to make a decision whether the appellant has a good case or not. The first is it's not the quantity of the information, but it's the quality of information. Some people literally will come in with 30 or 40 pages of evidence, and it's really not good evidence at all. Let's say that 30 or 40 pages, they had a recent fee appraisal. Well, that recent fee appraisal is really very valuable, and that could just overwhelm everything else that you have submitted. So just when you're preparing an appeal, that you have to go that way. Just remember, it's quality, not quantity. We look for comparable properties in your neighborhood. That's always another indicator of the worth of your property. Oftentimes people they will know someone who's involved in a residential real estate salesperson, and they will get comparable sales to you. Those also carry a lot of weight, and those are usually called comparative market analysis. As you'll see on the slide, comparable sales, those are ones that you know about personally or you've seen yourself in your neighborhood. And lastly, what you would want to present for evidence if you feel that your house is not up to the same quality that those homes that you're being compared to. You might want to take pictures. Perhaps if I've seen pictures of rain gutters that are hanging down, shutters that are askew, big cracks in a foundation we didn't know about. But that really carries a lot of weight with the commissioners. So again, you want quality information, a recent appraisal, recent sales in your neighborhood, comparative market analysis, or evidence of deferred maintenance. And with that, I am going to turn this over to Beth.
Great. Thanks, Bob, for going through the assessment process and appeal process. I'm going to go through the next step in the process and show how that value is then tied to property taxes. But to start with, I just want to give an overview of the framework. So the property tax system, it's based on state law. So it's governed by the Idaho Constitution, Idaho Code, specifically Title 63. There's rules through the Tax Commission. So basically, our duty as tax collector is to fulfill our statutory obligations. So we're not just arbitrarily setting up this process. We are governed by the Tax Commission, which helps oversee our compliance with state law. And because this structure is statutory, change would come through the legislature. And so just some examples, we'll be going through due dates. Those are set by state law. Should a payment be late, any interest charge or late charge, that's based on state law. So just wanted to make sure that that was clear and how we fulfill our statutory duties in our tax collector role. The next concept I want to introduce is that of a consolidated property tax bill. So homeowners in Ada County, they get one bill and it's consolidated. And what we mean is that it's on behalf of the taxing districts within our boundaries. So a taxing district, that's a local government unit. And the ones you might be most familiar with are county, cities. In Ada County, there are 6 cities. So you might be incorporated into one of those. Schools, let's see, highway districts, but then also other ones, mosquito abatement, emergency medical services, cemetery districts, fire. So in Ada County, on your Ada County tax bill, depending where your property is located, we are collecting for multiple taxing districts. And we'll get into that in a minute. And I just wanted to touch on how the property tax system, it's sometimes referred to as a budget-based system because the amount of taxes, it's based on budgets of these taxing districts where the property is located, but then, and as that relates to the value of property within that district. So you can see there in that image, well, the prior image, this is what the top of your bill looks like. It's the Ada County Consolidated Property Tax Bill. And if we go to the next slide, the one with the graphic, this is a great illustration in demonstrating this concept of a consolidated tax bill. So again, your property is located in multiple taxing districts. And what this graphic here shows is that of all of the property taxes that Ada County collects, it's tax dollars. So here's where you can see where your tax dollars are going. So if you take a look in the orange, where it says Ada County at 21.8%, what's that showing is of all the taxes we collect, Ada County has retaining that percentage, and that is further broken down, as you can see farther left, to public safety, to the courts. So that shows you of your total tax bill, 21% is going to Ada County. And then you can see the other taxing districts illustrated here. You can see that a portion is going to their cities, a portion is going to the schools. So what this is just showing is this concept of taxing on behalf of all of these various districts. We'll go ahead and go to the next slide. Promise not to turn this into a math class, but just wanted to explain this concept of how your tax bill is created. Like I mentioned, it's a budget-based system. And what that means is that each of the taxing districts we just discussed, a city, a mosquito district, they set a budget. And those budget hearings are in June. And then that number, or the property tax portion of that district's budget, we divide that by the taxable value in that district to determine the levy rate. And then it's this rate that is multiplied by the value of your individual parcel. So in step 2, we're at the parcel level. That's where we come up with the tax amount for a parcel that corresponds with that district. And I know that's a mouthful. Like I said, don't want to belabor this, but it helps in understanding the nuts and bolts of your tax bill. If we go to the next slide, again, a lot of information, but this is a sample of what you can expect to receive at the end of November. The tax bill, this one is for last year, the 2019 tax year, but when we create the bills for 2020, you'll receive something similar. And what this shows is just that you can see on the left every single taxing district where your parcel is located. You can see where we have entered a number 1, that's the levy. So that's the rate that is used to determine taxes for that district. On the right of your tax bill, you will have your taxable value. And one thing to note here, your taxable value, that's going to be after your homeowner's exemption, if there's one on the parcel. You multiply those, and that's how you get your tax amount. And so this process is repeated district by district on your tax bill. So just wanted to share that. And how it's the combination of the multiple districts where your property is located that determines the total amount of the bill. So you'll send a single payment to Ada County, but then we distribute it to all of the different taxing districts. We'll go ahead and go to the next slide. And this is a really important concept. Like I mentioned, we mail tax bills at the end of November, and we actually have 2 different variations of bill. And it's called an original bill versus a copy bill. And an original bill is a bill where the homeowner directly pays the county, and it'll list the dollar amount. So you can see we've pre-populated if you were to pay half of the amount that's due in December, or if you were to pay a full year, it lists it there. And the illustration that you saw, it was an original bill or a copy bill. Some bills we send out that you might receive, it'll say this is a copy bill. And the reason that's important is because this is an indicator that your mortgage escrow company has contacted us to pay your taxes on your behalf. And so please be aware of this when you receive your bill. If it does say copy bill, then in this example, US Bank Home Mortgage intends to pay county. You're likely making a monthly payment that includes a portion of your mortgage, homeowner's insurance, and taxes. So that company is paying, and you receive this bill to verify the amounts that are being paid on your behalf. But you don't have to pay this bill with one exception, and that would be if your financing arrangements have changed. So if you have refinanced in the month of November or October, or if you've paid off your mortgage, then you definitely would want to reach out to your mortgage lender, reach out to the county, just to confirm who is paying your taxes. But did just want to clarify that it is an important distinction that I encourage you to look at when you get your bill, to see if it's an original bill that the homeowner pays or a copy bill that is really for your records, but that a mortgage intends to pay on your behalf. And we'll go to the next slide. I did want to note just a few things on payment options. Especially during COVID this last spring, we encouraged payments by mail and online. We do have staff available daily here to help, but of course that could be subject to change. So we want to continue to encourage payments by mail and online. One important thing, a tip when paying by mail, and this again goes back to state law, and it's determining whether your payment is timely. So taxes are due for real property December 20th, but I put here December 21st because if the 20th falls on a weekend or holiday, it's the next business day. So this coming December, your taxes will be due on December 21st. And sometimes there's an issue in trying to figure out whether the payment was on time or late. And if we've received your payment, then there's no doubt that it's on time. The question comes up is what happens on December 23rd when we receive these payments? And as I mentioned earlier, it's governed by state law. And the state law states that it's the United States Postal Service postmark cancellation stamp. So that actual stamp on your envelope and that date that determines if a payment is timely. So I've talked to taxpayers when they put their payment in the blue mailbox on the corner, and for some reason the post stamp is omitted, or they leave their payment for their mail carrier at the door, and it doesn't get to us on time or doesn't get stamped, and not to fault the taxpayer, not to fault the post service, it just happens. And so my tip to you is encouraging you to pay early if you're paying by mail. And sometimes if you're paying by mail just a day or two before the due date, it would be worth your time to wait in line to receive that postmark stamp from the post office, because that is evidence that you've paid on time. So just a tip, I hate to see taxpayers charged a late charge or interest on these accounts. So that's one thing you can do to help avoid that. I also wanted to point out that you can make payments online, and most people, if you have a bank account, typically bill pay is free. So I would encourage you to use that as an option if you don't want to pay in person. One note when paying online is that these bill pay services, they can take 7 to 10 days for the payment to reach our office. So again, encourage you to pay early. We do have Dropbox locations. Those will be listed on our tax bill when we mail it. And again, love to serve you in person if you're comfortable with that, and assuming the courthouse. And we also have a second location that's out at Cloverdale. But again, our dates and hours will be listed on the bill when we mail it in November. We'll go to the next slide. And one thing I want to remind people is that property taxes are billed in arrears. And so what that means is that they're billed at the end of the period. So the period is tax year 2020. So in November, we'll be creating tax bills for tax year 2020, and that tax payment is due December 21st. And for real property, you have the option to pay the full amount, or you could also pay the first half. And if the first half is paid, then the second half is due next year. So I know some taxpayers have asked, when it's June 2021, why am I receiving a notice for 2020 taxes? And that's because next May and November, you will be receiving a second half reminder notice for taxes for 2020. And again, it's just all this concept of billing in arrears. One concept I did want to point out is that the Treasurer's Office accepts prepayments. So you are able to essentially self-escrow. You can send us a few $100s a month. You can set it up so that, like I said, self-escrow, so that you are proactively making those payments. And you might be in a situation when you can't pay the full amount, but even paying a partial amount, that still helps reduce any interest that might be accruing on the parcel. So it's a way to keep chipping away at that outstanding balance. And then just one more note, we collect on about 200,000 parcels throughout Ada County. And so when making your payment, we encourage you to include your parcel number on it. It just helps us to make sure that we're timely and efficiently posting the payment to the correct parcels, especially if you own multiple parcels within Ada County. And with that, I'm going to hand it off to Assessor McQuaid to talk about some property tax relief programs that are available.
Beth, thank you. Before I get started on the property tax relief, a couple of points I would like to make based upon the treasurer's slide deck. First off, when she showed the donut graph of the division of taxes between the cities and the county and the schools, is that I started out by talking about a fee versus a general tax. A fee would be a driver's license fee or motor vehicle license fee. But if you noticed on that graph that the treasurer showed, you have county administration. That is a general tax. When it comes to sheriff or police protection, that's a general tax. And we really need to have a general tax, because you just can't say, I'm not going to have police service this year, or I am not going to pay for the county administration. The general tax is something that we all bear. We receive the benefit, and we bear the burden of that, of paying for that benefit. And the second thing I would like to just mention that the treasurer's slides really illustrate very nicely, and that is we have dates. And these dates are very important. I'm going to talk about circuit breaker here in just a minute, and your circuit breaker application has to be in by the 15th of April. We will have people come in on the 16th of April, and they qualify for the circuit breaker other than one thing: they were late. And by statute, the cutoff is that. So I just really do make sure that you look at the due dates on certain things, because those dates are set in statute and there's really no leeway at all. So let's talk about property tax relief, and we'll look at that slide there. Thank you. We have the property tax reduction program. That's probably the most popular. It used to be called the circuit breaker, but several years ago they changed the name to the property tax reduction program. And this is not a handout in any way, and it's not using property taxes at all. This is a program where those who qualify for the program, the state will pay part of their property taxes using the sales tax revenues. So the property tax reduction program will reduce property taxes up to an amount of over $1,300. And it's several qualifying factors, but what really determines that 1,300 or less is your income. And we'll talk about that in just one second. So to get property tax reduction or the circuit breaker, first of all, you have to own and live in your home. That's as of January 1st. You can't own the home and have a child live in the house. You have to live in it yourself. The second test is you have to have an income less than $31,280. And that's an adjusted income. A good starting place are your federal tax returns for that year. And also you have to be age 65 years or older. You can be younger with some extenuating circumstances, but typically it's someone who is 65 years or older, a widow or a widower, veteran with at least a 10% disability. And you apply for that between January 1st and April 15th. Those who have received the circuit breaker or the property tax reduction the prior year, we automatically send out an application for you. A second form of property tax reduction is a fairly new one. I think it was just a couple of years ago. It's called the 100% VA disabled exemption. And if you are 100% disabled by the Veterans Administration, you automatically qualify for the full benefit of the $1,320. There is no income test for that at all. We talked about how to apply for that. If you're having a difficult time filling out the application, we certainly encourage you to come down to the office. We have a staff that will help you fill that out. There's also another benefit, a little known benefit, so little known that only one person in the state has taken advantage of this program, and it's called the property tax deferral. And that is, if you qualify for the property tax relief program, you know, you're age 65, your income is such and such, you don't live in your home, you can defer the taxes on that. And the taxes accumulate and interest accumulates on that. And at the time that the house changes hands, whether you sell it or you're deceased, the taxes become due at that point. Again, only one person as of last year was taking advantage of that program. And some people are reluctant to, and for a whole myriad of reasons. So I would like to do, spend just a few minutes here talking about the Property Tax Interim Committee, or more properly known as the Property Tax Study Committee. Someone made a comment, they were testifying at a hearing the other day, and I think it was so astute. And that is, we go into these cycles about every 10 years or so, 15 years. People just really become very discontent with the property taxes. And we are in one of those right now. And I think it has been caused by the steep escalation of appreciation of home values, that people are becoming very concerned about their ability to continue paying these taxes. And the legislature has heard that, and they have formed this study committee. The purpose of the study committee is, and I'm just reading their charge, is to study the current property tax system in Idaho, including expenditures of property tax revenues. That's really an important point, is including the expenditures of property tax revenues. The principal goal of the committee shall be to make recommendations that provide Idahoans with property tax relief, encourage economic development, and meet the needs of local units of government, which I just think are just great goals. And I really hope that this committee, which just had their third meeting a couple of weeks ago, that they will make some headway with this. With the increasing property tax bills and property taxes, I personally see two schools of thought are emerging, and that is that and I call them different schools, two schools of thought, to increase assessment. Schools, they argue, people saying taxes are going up because they increase assessment. And then you have the other school, which is called the out of control spending school. And those are just, that's how I look at it. There's nothing official about that at all. But to talk about the increased assessments school, they argue that because of the higher, the rising property values, that there's a shifting burden. It's shifting more so over to the residential property owners. In fact, there has been an increasing, we measure it as burden, who's paying the taxes. Over the years, especially the last 4 or 5 years, their residential property has been picking up a larger percent of the tab. And I would just like to make a point here. It's on the surface, it looks like business is getting off easy. Residential is picking up more. And it has more to do with a couple of factors, the reason why the residential property burden is shifting. The first is just that we have a lot of people moving into the valley. They are buying homes. We're just seeing a lot of new single-family residential properties. I had mentioned earlier that we had about over 5,000 new homes last year. So just the sheer volume of residential property is increasing. but also residential properties increasing anywhere from 10 to 15% a year. Commercial, on the other hand, for some really good reasons, is increasing at about 5 or 6%. So that means residential property is picking up a larger share of the property tax, and that's really receiving a lot of discussion. So there's some remedies. Those, if you're in the increased assessment school, there are some remedies that you're proposing. Is you want to see the homeowners indexed, and up to 2016, the homeowners exemption was indexed. It went from, at that time, it was just recovering from the recession, and the homeowners exemption, I think, was about $96,000. In 2016, the legislature increased it to $100,000, but they took the indexing off. So it's been fixed since 2016. Some people are saying that that shift is over to residential is because of the homeowners exemption being frozen. And they're asking that homeowners exemption be increased and indexed. They're talking about caps to values, that your value can only go up 5% a year at the most, or 10%, whatever number. And the problem with the caps is that people who live in homes that aren't appreciating as much, they suffer. They will actually see their property tax bills go up, while people who are living in homes with higher appreciating values, they get a break, and that's being pushed off over to the lower value properties. It's property taxes is a zero-sum game. When someone doesn't pay, somebody else is going to pay that. Another idea that's been pushed forth or put forth is moving averages, and that is we'll just look at the average of the values for the last 5 years. And so what's appealing about the moving average is that it will really slow down the rate of increase. And so it makes property taxes more predictable. And that's one of the big complaints today. It's unpredictable when values go up 15% or something. But the moving averages, in effect, are caps. So you run into that same problem. The lower value properties are going to be paying more of the tax burden than those in the higher appreciating properties. So that's the increased assessment school. That's the problem. The assessments are increasing too much. The other school is that you just have out of control spending, and it really needs to be fixed. And it's, in a way, it's a structural problem, and that's how they see it. And I think there's a lot of merit to the way that they see it. That is a structural problem. And that is right now, most taxing authority schools have a different method of determining their budgets, but for the treasurer and I, and those of us in Ada County, Boise City, others, our budgets can increase by a growth factor of 3%, plus the value of new construction. And by that, I mean we take the value of the new construction, those 5,500 new homes that were put on the roll, we look at that value. We take last year's levy times that, and any annexations, and you take that levy times that value, and you can add that to your budget. And then also you can use a foregone balance. Foregone balance is a real lightning rod. That is where if a taxing authority does not take their full maximum amount, that is set off in reserve called the foregone balance, and the taxing authority can bring that back out at any time and add that to their budget. Well, the control spending school, they just feel that there's no accountability in the spending, and there's not a lot of transparency there. And again, I think that there's something to that point. Everyone needs to understand better how is the money being spent by the different taxing authorities, and so we're looking for transparency there. Another point is the accumulated foregone balances. Those need to be addressed. That's always termed as a ticking time bomb, that there's all that, you can always go back and pull that back at any time, and that could be a significant increase cause a significant increase in property taxes. So the out of control spending, their remedies are, we want transparency. We want transparency in the revenues that you're receiving and in your government expenditures. the state has, the controller's office, there's a lot of transparency over there, and there is some call that the local municipalities and the counties and other taxing authorities, there needs to be more transparency in how they're spending their money. Along with transparency, there's a truth in taxation. That is, how much will the taxes increase before you set the budget, so that you will know that your taxes, before the budgets are set, you will know that your taxes are going to go up 5% or whatever, and then you can go down and participate in the discussion about that, that property tax increase. That's the truth of taxation. They also argue that take away the 3%. You don't need the 3%. You get the new construction only. There's elimination of foregone balances or modifications of that. And then there's talk about budgets. Your budget can only increase a certain amount. So these are all ideas that are being discussed, and they're going to be discussed in the legislature this year. And where we're going to end up is anybody's guess. I certainly don't know which way they're going to go. And it's the legislature, they're really making a good faith effort to address all of these issues for the residential property owners. They want to make sure that we still have a good economic environment for business, but yet property owners aren't feeling threatened because of rising property taxes. So that's what I have to say about the property tax study committee that's in place. And those pretty well conclude my remarks. Beth.
Great, thanks, Bob. Yeah, the legislature's this property tax study committee facing a lot of challenging issues. I did just want to note that the committee meetings are live streamed. So you're able to get those. I don't have the link handy, but I think if you go to the Idaho legislature website, there are links to listen in on these hearings. So go ahead and on the next slide, we'll just some concluding remarks. Summing up what we've gone over, it's the assessment process and understanding the appeal process. We took a look at how property taxes are calculated, and then how to understand your tax bill when you get that at the end of November, and your payment options related to that, and the importance of due dates in paying your tax bill, but then for any of the programs related to property taxes, including the property tax reduction program. We talked about the property tax relief programs, and just now concluded the presentation regarding the study committee, or the property tax interim committee that's been formed over at the legislature to take a hard look at the challenges in our property tax system. And so with that, we are ready to open it up to any questions, Marie.
Okay. Definitely a lot of information to learn. Thank you for all your explanation. So one of the questions that came early on, and I'm not sure if it was answered or not, and I know most of our group are seniors, so I would think that they're on some type of fixed income. And of course their concern and their worry is that things could change, and could they really even afford to be in the home they're in. So is there any provision being thought about to future address this for seniors? Any tax relief in any sense, as a person is aging and has only so many dollars per year to pay taxes?
Do you want me to take that one?
Sure.
Okay. Other than the circuit breaker, that's all that I've heard. There are a lot of different ways that can be handled by states in different areas. I know in Washington, D.C., I think if you have $130,000 income or less, your values are automatically fixed at the time that you turn, I think it's 60, 65, whatever it is, and your value will not go up any more than that. And there are several other programs, but I am not aware of any discussion at all in Idaho on that, other than the property tax reduction or the circuit breaker. Now, there are two ways that that could help seniors. Number one, you could change the maximum the maximum income for eligibility is at 31,000 something right now. You could move that up to a higher level. And then also you could increase the benefit. The benefit was $1,300. You could increase that $1,400 or something like that. But those both would require legislative action.
So really any changes is going to have to come from the legislature.
Yes, yes. It's just like almost all the other things that we do in this office. The legislature has put a lot of good sideboards up that we have to operate within.
Is there, I guess this is my thought, I was just thinking, have you seen the taxes ever go down since you've been in this position? Either one of you, since you've been working for the office that you're in.
Beth, did you want to have him take that one and then I can do it too? Why don't you, Beth, go first?
Sure. And I've been in office for a shorter period, but I have seen it on occasion. It really just depends on where the parcel is located, the districts where it is, any improvements to other parcels. Because if another parcel is taking more of the tax, then perhaps there's a lesser tax on another parcel, because again, it's a zero-sum game. And so, yes, I have seen it on occasion in just the 2 years that I've been holding office.
And does that happen in certain, like, if it happens at one household, would it happen the same way in that same, let's say on the same street, in the same subdivision they're in? Or does it just happen house by house when things change?
Bob, any thoughts on that?
Parcel by parcel, I should say.
Yes, it could go down. And I like Beth, I've seen it go down. It's not a real big occurrence, but it can. And it would typically be maybe like a neighborhood. If we'll say if there was 1 year that perhaps we felt that we'd overvalued a neighborhood, and we have more information, the quality of our assessment is just based upon the information that we get. But let's say we get some additional sales and we decide we've overassessed it, we could reduce it down a little bit. And then if the levy goes down, you certainly you would see a decrease in taxes. Yeah, sorry.
I'm just guessing myself that because we have such a big growth spurt going on, you would not see that happen right now or coming up this next year or so. Doesn't growth spurt also drive that up, the taxes up?
Growth in what way?
The development that's going on here in Ada County, let's say.
Well, that in itself is a real good question that people ask, and does growth pay for itself? But I've seen some modeling done where if you have everything in the budget stays exactly the same in the level of services, and the only thing that changes is if you had 100 new homes in, the increase in value from those 100 new homes would pay for the growth. But that's just a model. There's a lot going on. You have ACHD, you have the school districts, you have a lot more going on. So that's what leads back to the question, does growth pay for itself? And I've not seen any real definitive studies. Have you, Beth?
No, I haven't.
Well, it seems to me that one of the problems that we have in the Boise area and certainly across the Treasure Valley is we're pricing our jobs, the jobs that people have here don't match with the housing costs. You work a service job, you can't pay for a $400,000 house. That's just common sense. So if we were to actually be able to increase by some large amount lower income homes or more apartments or something like that, then that says that growth for us right now is because we have so many people coming in that's at 400,000 or higher. And that's what's making it difficult for us to understand what's happening with everything. If we really were able to get people in housing that they could afford, then we would see something different there. A lot of more people, but the assessed value would go down, it seems to me. But
Beth, did you want to comment on that?
Yeah, I just believe, I mean, affordability certainly is a problem. And I know different jurisdictions are trying to address that. You know, one thing that I think could help some homeowners, it would be an increase of the homeowner's exemption. Like the assessor mentioned, it's currently capped at that $100,000. So the more that the value increases, then there's a lesser benefit. So I think that is one option that could allow more relief to homeowners.
mm-hmm.
Do you know if there's anyone that the seniors could have that would be an advocate for them? Have you known of anyone that's tried to push things forward for the seniors when they come to get in this predicament?
It would have to, well, Art would be a good one. Would be
Right.
a formidable.
Yay, Art.
Yes, and that would be a good one to be the tip of the spear, so to speak, of this issue.
Okay. Another question is, how many people do not take advantage of the homeowner's exemption? So, is that something that you keep track of?
We really don't know
Yeah.
what the number would be, but we do know that there are people out there who don't take advantage of it. Someone will live in their home, have lived in their home, we'll say for 15 or 20 years, and something happens, they might file an appeal or something, we look at it and say, wait a minute, you haven't been getting the homeowner's exemption.
Mm-hmm.
It's like, well, I didn't know that. So there's some out there. I'll tell you what, something that is a problem, and that is people who are getting it who should not be getting it.
Oh.
And there was a statutory change a few years ago, and it's called the homeowner's recovery. And when it comes to our attention that someone was getting the homeowner's exemption when they should not have, it's not, we have the ability to, we are by statute required to do a recovery.
Mm-hmm. Mm-hmm. Interesting.
So how is someone able to get that if they're not, it's not available to them? Is it just a matter of being honest?
Maria, I think it's several things. There are some people just didn't know that they had one on another property from. They just didn't, you know, we get our tax bills and we don't look. I don't pay that much attention to it, or they didn't realize there's been a change. So this is really a classic example: a husband and wife. They're getting homeowners exemption. They each get 50% of the homeowners exemption. They get a divorce, and so now the house should one person is moved out, but the house is still in the name of both spouses. There should only be a 50% homeowners exemption, but they're getting 100%. So they just did it unwittingly. But there are some people that you are just astute enough that you can't help but feel that they know that they should not be getting it, but they're getting it anyway. Sorry for belaboring that.
No problem. Go ahead and ask your question.
So we just sold our home, purchased a new one. When does the homeowner's exemption transfer to the new home?
Okay, it's our personal question.
But it's a good one. It's a good one.
Yeah, so we just, sold and purchased a new home. So when does the homeowner's exemption transfer to the new one?
Okay, let me ask you this question. Is it a new home or an existing home?
Existing.
Existing home, 10 years old.
Okay, assuming the buyers lived there.
Yes.
After January 1st, that home will have the homeowner's exemption on it for this year. And the home you lived in, that homeowner's exemption will be in place until the end of this year, which time it will come off, and someone else has reapplied for it. It would come under another name. But something that really is important, I'm glad that this is brought up. There is a change in the homeowners exemption law starting January 1st of 2021. You used to have to have lived in the home by April 15th and have applied by April 15th. But with this new law, you can apply for the homeowner's exemption at any time of the year. You could buy your home in December. We'll say it was a vacant home all year long. You bought it in December, you can apply for the homeowner's exemption and you'll get the benefit of the homeowner's exemption for the entire year.
Wow.
And that's new.
Okay, something different,
Yeah.
something new.
Yeah.
Just to clarify, you said the 31,280 per person, per household. That is per person. So if you're 65 years old or a veteran or a widow, each person qualifies. If you're in the same household, it's 31,200 per person. So one's a veteran, one's over 65. It's per person, correct?
That is the household income
So
would be
just
that.
overall household.
Yes, yes.
Okay.
But you raise a good question. Let's say if one is, anyway, there's a lot of different combinations and permutations. I'm not going to go into, because I don't know the answer on most of them.
Right. So I think we've answered the questions that I have in the chat window. I don't know if there are any other questions or if anyone wants to ask their question themselves. You're sure welcome to do that. And we'd have Sheena would unmute you, or I guess you're going to unmute yourself, correct, Sheena?
That's right.
If they wanted to.
That's right.
Yes, I don't see anybody with another question at this point.
Well, I just have a comment, and that is, since I live on Cloverdale, so I love that satellite place. It's really awesome. Just drive, it's like 3 blocks from here. Just drive down there and pay them. It's great.
Oh, I'm happy to hear that. And yes, we have a secure drop box at that location, and then it's also staffed in December, so you can pay in person there. So thank you for using that.
Yes, yes, it's awesome.
Sandy, did you have a question?
I just want to know whether we need to approach Lupe or somebody about advocating for us with the legislature for this program that's going on right now.
That's our person with AARP, is who she's talking about, Lupe Weisel. I would think so. I would think she would play a big key in this.
Well, I think that we all should write her a note.
Absolutely. We all have an email for her. We should all send it at one time. So Bob, I found it really interesting about the study committee. Did you say that is new?
That study committee was formed this year, and they've had 3 or 4 sessions they've met so far this year. I think it's October 2nd is when they meet next, and they've had people come and testify, offer testimony, and it's really a good cross-section of the population. And I think they're getting a lot of great information. It was last Friday when they met last, and they were just starting to discuss alternatives and different philosophies and things like that. So I think it's October 2nd. That's when they'll probably start coming up with some ideas.
So this is something that anyone can get on and listen to?
Yes, you can. Yes, you can. And I would encourage people to do that. It's really instructive. You could just go to the Idaho State Legislature Property Tax Study Group. That should get you right there.
Yeah, okay. That interests me. So I was just curious to know if it was open to everyone to be able to get on that.
Yes, it's strange. In fact, I'm watching it from my office when I watch it.
Great, great. Okay, we'll have to look that up and see if anyone in our grouping of the volunteers and AARP would be interested, especially this is such a hot topic for the age bracket that we're all in. The more we know, the more we can pass on through AARP to see if, like you were saying, Sandy, to see if we can get Lupe to be an advocate for us with the legislature. So we really appreciate all your information and your time that you've taken, and we have recorded this. So if you would like a copy, we'll make sure that you have the availability to get that yourself. And we will, we're going to offer that to, we're going to have a library of these with AARP. So evaluations are also something that we're going to get. Sheena, you're going to send out that link.
She did.
There you go. And if everyone would please make sure they fill that out, then we'll get more ideas on how we're doing. And as we continue, we will have more information on what interests everyone. But I personally feel like I got a good education today on things that I've wondered how this is all comes about with taxes. And, you know, it's one thing to say, why is the taxes going up, and not understand it.
Yes.
So you gave us our reasoning, and now we'll have to digest it. And if we have questions, I have Beth's email. I can always sit back, ask her more questions. And if anyone does have any questions that you think of after we are done with this class, please direct them to Sheena or myself, and we'll make sure that they get to either Beth or Bob, and we can get answers for you.
Great.
All right, thank you so much for having us. This has really been a lot of fun, and I hope your audience got as much out of it as I got out of it. Thank you.
Yes, we appreciate it. Thank you for taking your time today and setting it up that it worked in your schedule. I know you're in 2 different offices on 2 different schedules, so glad it worked for you.
Thank you, Beth, for
Thanks, you
putting
guys.
it together.
Thank you. Okay, appreciate it.
Bye.
Okay, bye-bye.